Welcome to Furniture Industry News. Today is January 30th, 2026. Thanks for spending a few minutes with me to catch up on what's happening across the furniture and home furnishings industry. We've got a mix of financial performance, consumer behavior, design direction, and some meaningful shifts on the retail and supplier side. Let's get into it. We'll start with earnings, because they continue to give us a pretty clear snapshot of how demand is behaving right now. Ethan Allen reported its fiscal second quarter results, and the headline takeaway is fairly straightforward. Sales were softer, but margins held up well. For the quarter ending December 31st, consolidated sales declined just under 5%, landing around $150 million. Wholesale was the weakest piece, down close to 9% compared with last year, while retail sales were essentially flat. What stood out more than the sales number was the order trend. Written orders dropped in the high teens year over year, which signals that demand slowed as the quarter progressed. That lines up with what many retailers and manufacturers have been feeling on the ground since late fall. Consumers are still buying, but they're being more selective and more cautious. Despite that slowdown, Ethan Allen managed to protect profitability. Gross margin came in at just over 60%, slightly higher than a year ago, and operating margins remained solid. The company credited disciplined cost control and the benefits of its manufacturing scale. Cash and investments ended the quarter at roughly $179 million, giving the company flexibility to continue dividends and modest capital spending. Management also pointed to new product introductions as a bright spot as they work through what appears to be a slower start to the calendar year. From there, it's worth zooming out and looking at how broader consumer attitudes are shaping furniture demand. The latest consumer confidence report showed a clear drop in sentiment, with declines in both how consumers feel about current conditions and how they view the near future. For our industry, the most important detail is that planned spending on furniture weakened notably. Furniture was grouped with other big-ticket categories like appliances and electronics as an area where consumers are pulling back or delaying purchases. That's not entirely surprising. Furniture often falls into the category of things people feel they can postpone when confidence slips. For retailers, this reinforces the importance of messaging that focuses on value, longevity, and everyday usefulness, rather than discretionary upgrades. It also suggests that promotional strategies may continue to play a role as shoppers weigh purchases more carefully. While consumers are being cautious, designers are already looking ahead. A new trends outlook from the American Society of Interior Designers offers a view into where residential design is headed as we approach 2026. The report points to four major forces shaping the built environment: global economic and trade uncertainty, rapid technology change, climate pressures, and shifts in the workforce and population. One of the most relevant trends for furniture professionals is the growing influence of an aging population. Design that blends function with style is no longer a niche conversation. Features associated with universal design are increasingly being considered standard, especially as homeowners look to stay in their homes longer. At the same time, the report highlights a growing desire for personal expression in interiors. Consumers are placing more value on spaces that reflect who they are, rather than designing solely for resale value. For manufacturers and retailers, that can translate into opportunities around customization, modularity, and more expressive assortments. Shifting from design to retail restructuring, there was a notable development in the ongoing bankruptcy process involving Buddy Mack Holdings. Phoenix RBS has been identified as the stalking horse bidder for the remaining 37 Buddy's home furnishing stores operated by Buddy Mack. The stalking horse bid is structured at approximately $7 million and includes the assumption of about $1 million in bank debt. Phoenix RBS is the largest secured creditor in the case, having acquired a loan tied to the stores. The bankruptcy court approved bid protections, including expense reimbursements and overbid requirements, and set an expedited timeline. Competing bids are due in mid-February, with a sale hearing scheduled later that month. This move follows Buddy Mack's Chapter 11 filing earlier in the season, as the franchisee worked through operational disruptions and credit issues connected to financial trouble at its franchisor. The outcome of this process will likely determine the future footprint of these locations and how the brand stabilizes moving forward. On the supplier side, there was another sign of ongoing pressure in the upholstery segment. Olivia and Quinn, known for stationary leather upholstery and related products, announced it is ceasing operations. The decision was confirmed by company president Jared Worrell, who said the closure follows a broader drawing down at the parent company level. The brand had built a presence across retail, design trade, and direct-to-consumer channels, offering sofas, sectionals, chairs, and power recliners. While specific operational reasons beyond the parent company decision were not detailed, the shutdown removes another sourcing option for retailers and designers. For some, that may mean adjusting assortments or finding alternative suppliers, especially in categories where Olivia and Quinn had carved out a following. When you step back and connect these stories, a few themes come through clearly. Demand is softer and consumers are cautious, but companies that have strong margins, healthy balance sheets, and disciplined operations are better positioned to ride out the current environment. At the same time, structural shifts continue, whether that's retailers navigating bankruptcy processes or suppliers exiting the market altogether. Design trends remind us that long-term demographic and lifestyle changes are still shaping how people think about their homes, even when short-term spending tightens. For furniture professionals, the challenge is balancing today's cautious consumer with tomorrow's evolving expectations. That's the latest snapshot of what's happening across the furniture industry right now. If you find these updates helpful, make sure you're subscribed to Furniture Industry News so you don't miss future episodes.